In a year marked by global uncertainty and rising costs, the government of St. Lucia has delivered a 2025 budget which claims to place tax relief at the heart of economic recovery and financial resilience. According to Prime Minister Pierre, this year's measures are not just technical adjustments, they are strategic interventions aimed at empowering citizens and strengthening the economy from the ground up. Others posit that these measures are but smoking mirrors on the heels of a general election. So we sat down with veteran tax consultant Antonia Alcindor to analyze the Prime Minister's pronouncements, the first of which was income tax adjustments. For thousands of working St. Lucians, the increase in the personal income tax deduction from $30,000 to $40,000 means more take-home pay and less tax burden. It's a targeted move to ease pressure on the middle class and encourage compliance. Additionally, in an unprecedented move, the government has extended the tax amnesty program to May 2026.
The amnesty allows you to file up till 2024 without the constraints of penalties and interest. Every time you do not file your taxes for the preceding year by the following March 31st, you would have accumulated interest and penalties on the taxes that are due for that year.
The amnesty was originally set to expire in May 2025.
That gives us a breathing space for another 12 months for that amnesty. And it's further extended to penalties for up to 2023. So people who filed late prior to 2023 will get the amnesty waivers for penalties and interest.
The waiver offers a window of opportunity for many who had fallen behind to clear their records and re-engage with the economy.
To buy a property, you need to have compliances. To sell a property, you need to have compliances. To take a mortgage on your home, you need to have compliances. So the tax amnesty is a greater awareness for people and their taxes because of all these compliances that are required to transact business.
Retirees are the new poor reflects a growing concern that many people entering retirement today are financially vulnerable, lacking sufficient income, savings, or support systems to maintain a decent standard of living. The 2025 income tax allowance sought to offer some reprieve.
Because to be a pensioner, you would have had to contribute something at some point in your life, your working life. And based on their contributions, I think the government has given them their due by removing the burden of taxes on them because they've paid taxes all their lives. So now pension income, full stop, is exempt. Your NIC pension, your government pension, whatever pension it is exempt.
Tax relief is also reaching the heart of St. Lucian households. The tax break for children under 18 has also jumped from $2,000 to $5,000.
So $5,000 was not even a drop in the bucket when it came to an allowance for a university or higher education student. Now we get $10,000. And what's instructive, it's been doubled. I mean, it didn't go, the government could have said, well, let's increase it to $750, but they doubled it. They understand the value. We all understand the value of education.
Credit union savers also benefit from a significant increase in the tax deductible threshold.
My advice is always to my clients that you save in the credit union, and instead of withdrawing your shares, which would reduce your ability to claim with your taxes later on, you can take a loan against the shares. So as a lay person or the ordinary person, you have an account in the credit union, it is encouraged, you're encouraged to save more than the $10,000 if you care to, but you know that you will get a tax allowance for $10,000, which would reduce your taxes, and that you can plow into other things that you have to do.
These new tax reforms unlock new possibilities. For some, it's a chance to erase years of debt. For others, a moment to invest. Real change won't come from policy alone. It will depend on government's machinery to facilitate the smooth access of these reliefs. Shane Stephen, NBC Prime.